Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Welcome to Ask Rob and Rob, the weekly show where we like to answer your property queries. This week we've got a couple of excellent questions and we'll get to answering those in just a sec after we've given you a quick reminder of how you can send in a question of your own.
Yes, it remains very easy. You can go to thepropertyhub.net/ask and you can submit your audio that way. It's really easy and you can re-record it if you're not happy. Or you can pick up the phone and dial 013 808 00035. That's 013 808 00035. Normal rates apply. Rob and I do not answer personally, but you will get an answer phone beep and you record your message after that. Again, if you don't like it, just re-record another one. No pressure. Pressure's on us to come up with good answers. So let's see how we do. First up, we've got Andrew.
Oh, hi Rob and Rob. My name's Andrew and I'm an avid listener of your podcast. Firstly, I want to say thank you for providing such a valuable service. Your podcast is so helpful and I'm always learning from you guys, so thank you so much. My question is about refinancing versus selling. I'll give you a quick overview. I have two properties. One is worth 300k and the other 200k. I have a 100k mortgage left on each, so that's 300k total equity available. One rents for 1,000 per calendar month and the second for 750. However, after all costs and largely due to the fact that I have a 15-year repayment mortgage on both, I make no cash flow. So basically I'm neutral each month. So the return on investment is terrible. I've made 100k in capital growth over the last 5 years, so it's not all bad. So in summary, 300k equity, but I'm making zero cash flow each month. So I need to restructure the cash flow in order to become financially free. I can refinance both to interest-only mortgages and release about 100k total. I will then make about £100 positive cash flow on each, with £100,000 to invest on more sensible investments. Or I sell one or both and have up to £300,000 to invest on more sensible investments with a much better return on investment. So considering capital gains tax, cost of stamp duty, cost of selling, tax advantages of switching to a limited company, etc., should I refinance or sell? Thank you so much for any help you can give. Andrew.
Thanks, Andrew. Great question. And this pairs really nicely with an episode we did very recently on the Thursday podcast, which was episode 298, which is about Rob D's expensive mistake. Now, if you've not listened, please go back and listen. But the main takeaway from that podcast is that you need to be very clear on what you want from your goals. Are you in it for cash flow or are you in it for capital growth? Are you in it for the long term or are you in it for the short term? You may want both, and that's perfectly fine that you want both. You know, that I like a person with high standards. However, one will always rank higher than the other, and you need to determine that so you can decide your next step. Because yes, absolutely, with a short 15-year repayment mortgage, your cash flow isn't going to be that exciting, and you're not going to take much away from it. But you mentioned in passing that you've made £100,000 over the last 5 years. So I'd probably take no rent if I was going to get £100,000 in capital growth over a 5-year period. Now, you didn't know that when you set out, but it shows you how powerful the capital growth can be if that's your strategy. What you do next is really down to that question. Are you in it for growth or are you in it for yield? If you're in it for yield, you may want to consider taking the entire pot and investing that in higher yielding properties. If that's your goal, it's quite simple. Take it all, go and put it in higher yielding properties, and hopefully you'll hit your number. If it's longer term capital growth, you may want to keep that property. It's been quite kind to you so far, probably in a good area if it's had that level of growth. Of course, that is not always going to be sustained and it's not going to go on forever, but still might be worth hanging on to. And with the rest of your funds, which is still a sizable amount, you can go and buy other properties with mortgages in other areas that are doing really well from a capital growth point of view. So we can't tell you exactly what to do here, but what we can tell you is what your options are, and how you decide which option you go for will be very much determined by your goal.
Rob is absolutely right to emphasise the importance of goals in that answer, because the natural inclination for a lot of people in property would be, no, you've got to maximise your leverage, so refinance, get at that equity, expand as much as you can. And maybe that is the right thing to do. But it's worth remembering that there are a lot of people who are less ambitious in property, and I don't mean that in a bad way at all, where they just want to hold one or two properties, get them paid off as quickly as they possibly can, and then hold them mortgage free for the income, and that income will give them what they need. There is nothing wrong with that whatsoever. The issue comes in when your strategy regarding the properties you're buying and the way that you're financing them and the way that you're paying off that debt doesn't match up with what you actually want to achieve in the long term. So by taking it back to basics and figuring out what you want, that should put you on the right track with what to do with these properties. Okay, let's have a listen to our second question today. This one comes in from Scott.
Hey Rob and Rob, my name's Scott. I've been in property for a couple of years now, and when I started getting to it, built a house first of all, started listening to you guys while I was building, so while I was on site all day I'd have my headphones in listening to you guys. You've really kept me motivated, and I'm continuing on this track, and it's going to be a lifelong career. Very excited about it. So my question is, you're talking a lot about capital growth in up in Manchester and Liverpool, around the Northern Powerhouse, and the HS2 rail line coming in around there. Obviously, London has died off and flattened out, in some places dropping. Where do you see London going in this next phase of the growth cycle? Do you think London will pick up and have good growth, or do you think that London's worth staying away from and investing in the areas around it? Also, for development, do you think London is a place to develop, because obviously you can have good uplift because the prices they tend to be higher, or do you think that it's better to stay around places like you've mentioned, Crewe? Thank you very much. I hope you can answer that and shed some light on that for me. Thanks again for everything you do, and all the best. Cheers.
Thank you, Scott. Wow, do you know how to make us feel inadequate? We're just sitting here chatting, and while we're chatting away, you've built a house from scratch. That's really impressive. But I'm glad we managed to keep you motivated and entertained, hopefully, as you were going through that process. So you're absolutely right. We have talked a lot about capital growth up north and around the northwest and the Northern Powerhouse region. We are not the only people talking about this. I think it's important to say this isn't just some kind of personal bias or something we've come up with. We probably were saying it quite early, but now it's generally established that there is going to be stronger capital growth in the north than there is in the south over the next few years. There have been several reports come out recently, including one from Savills, talking about how there's going to be far more growth in the north. Where does that leave London? Well, London has been stagnating and flattening out, and my personal view on this is that London has had such strong growth in the first part of the cycle. It came back so quickly and so strongly from the last crash that the growth that it has in the second part of the cycle is going to be weaker. So there's going to be this convergence effect. So London may continue to grow a little bit, but it will do so slowly because it's had so much growth already. Whereas areas further north where growth has been depressed so far will grow a lot faster, so the values will relatively come closer together. Does that mean that there's never going to be an investment case for London if you're looking for capital growth? Absolutely not. There will be a time to invest in London again. You could, of course, develop in London now. There are investments that you could make work, but I would think that the best time to go back into London would be after the next crash, so at the start of the next cycle. Because last time round, London crashed pretty hard, but it came back very quickly, and there are good reasons for that. So chances are, next time round, it'll be the same again. London will crash hard, but it will come back relatively quickly. So if you manage to buy in at a low level, then London, over the long term, will always be a strong place to invest. It's a global city. It's always going to be strong. It's just a case of getting in at the right price. I don't think the time is now, but the time will come again. So that's my view. That's what I'm looking at. You can look at the data and look at your crystal ball, and you might come to a different decision. But I think it's almost certain that if you're looking over the next 3 to 5 years and you're looking for capital growth, the north is where it's at.
It may stun some listeners, Rob, that I fully agree.
No.
Yeah, honestly. And that is very much the way to go if all things are equal. But to you, Scott, things probably aren't all equal, because if you are used to developing in London or the South East, so developing in Crewe or other areas in the north may present more of a challenge. So you have to weigh up that cost as well, your potential lack of network, your travel cost, the additional time you'll have to put in to doing a development or managing a development further north. If you have the contacts and you don't live too far away, then fantastic. But for you personally, that may present a challenge. So Rob's analysis of those areas, I think, will be proved to be absolutely correct and bob on. But if some slow, modest growth in London over the next 5 years is good enough for you because you're so set up down here, then maybe you'll accept that the returns might not be as stellar, but it'll just be easier to accomplish your mission. Only you can answer that, Scott, but it's worth bearing in mind. What's also worth bearing in mind is the year is nearly done. So I've got a little challenge for you. Over the holiday season, think about your property questions. Sit down in a nice armchair, put some easy music on in the background, or maybe the property podcast, and think about your questions. Write them down. And then go to your computer, go to thepropertyhub.net/ask and ask them, because by doing that, you'll actually get answers to those questions. Or you can call the telephone number we've previously mentioned. So if you've got a bit of time over the holiday season, get your questions in and we'll get them answered in the new year.
So that's us done for today, but we'll be back in just a couple of days. We'll see you on Thursday for the Property Podcast. See you then. Bye-bye.
Bye-bye.